of keen interest following, of course, what happens out in Asia. And as you can tell, the slight negativity has as well hit the European market. So the FTSE 100 out in London going down a touch, while the CAC 40 and the DAX in Germany also sit in negative territory. Over into the local front, well, initially we had seen some good stock trading then for the week, but that has all fallen away just a little bit then. South Africa's JSE sitting now at around 54,000 odd. Industrial counters as well sitting in a slight bit of green, while the financials are, however, down there, 38,934 points at present. Over onto your resource counters. Well, the resource shares themselves are down at this point in time. The resources having to slip, while the gold shares are also sitting 1.47% down. Platinum shares as well in negative territory. Over into your commodities picture itself. Well, that seems to also have unfortunately faltered somewhat a little bit earlier in the day, but recovery has certainly been the story ever since then. $1,464 a fine ounce. Perhaps some traders rather looking for some of those bargains as they shy away perhaps from that equity front. Platinum now going back above that $900 a fine ounce mark, so a key level, quite important on that front there too. And it seems the oil price headed higher, because it seems then that the slowdown, or the global slowdown that is currently affecting markets, and the cons of that seem to be outweighing the pros of that deal that was signed, of course, between OPEC and its associated partners when it comes to output for next year being cut by around 500,000 as well. So $64.36 a barrel there. It's 14.74 the US dollar. Some resilience in South Africa's currency. Let's remember that 4 years ago indeed was when we saw the finance minister then, Pravin Gordhan, being ousted, and the rand seemingly took a massive knock. Things are sitting pretty much exactly where that scenario had led us 4 years ago, and even better at this point in time at 14.70 against the US dollar. However, against that pound, a smashing 19.37. So some weakness still lingering in the local currency. Let's take a look at those BRICS currencies. Well, they seem to be in some green territory for now, with China's yuan also doing quite well, while the rupee as well in India is headed higher. Let's unpack this market movement now. Where exactly have stocks gone for this year? What has actually happened across the local market? Travis Robson, the CEO of Inyati Capital, joins us in studio. Firstly, congratulations on that new move there, Travis. 0.75% down at present then for the JSE All Share. It kind of has been the story for the year, hasn't it? Up one day and down the next.
Yeah, afternoon. Thanks for having me on. Definitely been an interesting market. If you look at the JSE over this last year, I think we're in on around 7%. Interesting to see how much impact Eskom has over the next 2 weeks on our local market. But, you know, the markets in South Africa have really been benefited from, surprisingly, from the resources, as well as one of our JSE heavyweights, NASPAs. So that's been helping the market up. But overall, you know, a lot of pressure on the markets. If you look at our economic growth, and you know the pressure on that, and you guys have unpacked those numbers, I'm sure, over the last week or two. You know, we've got possible recession happening. That's put pressure on the banks. It's put pressure especially on the retailers. If you look behind me, ShopRite is down in the red, down 3-4% today. So a difficult market for a lot of local shares. Surprisingly good market for the resources, as well as you know, some of the heavyweights. But overall, you know, it's been a tough time, but I expect the markets to finish in the positive and around 8%.
Yeah, when one takes a look at the retailers, as you made note there, year to date, however, ShopRite down nearly 30%. The Foschini Group down almost 8%. When one takes a look at the Spar Group as well, down over nearly 6% at some stage. Mr. Price down nearly 7%. So it has been quite negative, and that really shows you then the state of the South African consumer then, doesn't it?
Yeah, not only the South African consumers. If you take companies like Foschini's, also Spar, you know, Woolworths, some bigger counters, they all have operations offshore to some extent. And, you know, there's been slowdowns in business in the UK, in Australia. You know, Woolies hasn't performed well within the clothing sectors. So when a company or businesses are looking to expand for growth and increase revenue, like a lot of the retailers have done, you know, there hasn't been that growth. There's been uncertainty within the overall macroeconomic side. So not only a difficult time for these retailers locally, but those retailers looking to expand growth and opportunities abroad haven't found the returns or revenue that they would possibly have liked.
Yeah, I suppose then where do you find the growth? Where do you look to? Particularly this past year has been difficult, and over the last 2 years, we, as the JSE, definitely down in the last 2 years. But where does one then look to in future for any sort of growth? Which sectors? Would you really go back to those mining counters, which for now are up, but the sustainability long term seems to be questionable?
I think you've got to look and, I always say to investors or clients, the longer you hold the stock or an investment, the more you iron out the volatility. And you've got to have a long-term horizon. You've got to look for passive growth. Certainly you can hold in cash, very little risk in that, but you're not going to see more than 4 or 5% on your annual return. Yeah. And interesting enough, quite a few investors look at the South African bond market. Surprisingly, that offers a yield of about 8.5%, which is relatively low risk than going into equity markets. So that's an opportunity. But what we're seeing is a large move from consumers or traders looking away from the South African market, which is not good for our local economy. They're looking to broaden their horizons and go into exchange-traded funds, investment baskets on the S&P 500, on the European markets. There's still opportunities and growth there. Yeah. Those funds are really big. They're really diversified. They're underpinned by big tech stocks. You mentioned earlier Apple, Facebook, Microsoft, Visa, and those companies tend to wear out the storm over a longer period of time. They also offer a relatively good dividend yield for those passive investors. So as much as I don't want investors to start looking away from the local markets, but it is very difficult trying to choose a sector in South Africa at the moment. Like you say, the miners, they offered good returns over the last year, but difficulty with load shedding. You mentioned earlier with Implats on the daily losses they're experiencing due to the load shedding. I still think if you look at gold ETF, gold is relatively a safe haven buy, and so that can offer opportunity. Surprisingly, our rand has been relatively strong against the dollar, and that hasn't to do with uncertainty in South Africa. That's more to do with the macro. We talk about Trump impeachment, we can talk about trade wars, we can talk about uncertainty with Brexit. That's all going to affect the dollar. So you could look at it from a treasury or capital, moving money into treasury, or you could look at diversifying into a more passive global ETF exchange traded fund, where you're not isolating the risk on one share, you're looking more at a basket. Locally, if you want to take an opportunity, there's the SA bonds, very interesting, a good yield at 8.5. I think investors need to be really cautious though. Coming February, we may see a downgrade after the budget speech, and that would obviously affect the local bond market.
Very quickly then, Travis, tomorrow the Fed cut, no cut, hold, that is the supposition?
Yeah, so we've seen the central banks coming out this week, and that's why the market's been subdued. I think it's going to be no cut or very passive. The central bank's narrative or tone have been very much supporting the economy at large, so I can't see anything too drastic. Yeah. However, I'm not psychic, I can't read the markets, but very limited change within the central banks. That's not just the US central bank, that's also in China, Japan, and Europe. So the tone from the central banks is try keep it steady, try keep it going through in this tough global economy. So I can't see massive changes from the overall central bank data that's going to come later in the week.
Yeah. Look, Travis, with your years of experience, I certainly hope one day you do get to be able to forecast the market as well as all the others. Thank you so much for your time.
No wish for that.
Thank you so much for that. Travis Robson, then the CEO of Inyati Capital, joining us live from our studio at the Johannesburg Stock Exchange. We continue to give you more